Hey guys, beat twice here. Today is Sunday, July 11th. Hope everybody's having a good weekend. Been a crazy busy weekend, so I haven't really been able to jump on here do a lot of videos. Going to be doing a little chart session here for the next couple hours, so hopefully I'll be able to get to a lot of people's requests, and then some things that I want to look at. So the one thing that a lot of people started asking about was IWM. The Russell 2000 has been getting pretty badly beat up. So where is it going? Where do we currently stand in the grand supercycle? I figured let's just take a look at all of that. So I just went through and counted this just from the beginning of time. It's not something I actively trade. After what I see today, I'll tell you kind of what I think about the setup of where we currently stand. But what I'm seeing is that we've actually, from the beginning of time, or I went back to like 2000, we actually had a five-wave impulse going up to the COVID crash. So I'm calling that a higher degree wave one, ultimately pulled down for a wave two. So now we're going to jump into the weekly time frame. This was the monthly. We're going to jump into the weekly so that we can see where we currently are now. So go just so we can kind of see it a little bit better. Let me just zoom in on this. All right. So basically, what I'm seeing is I still don't like how this looks. Okay. So what I'm seeing is that on the weekly time frame, back at the COVID crash, we came down for a two. We have a five-wave impulse up for a one, pulled back for a two, five-wave impulse up for a one, two, three, four, five. So what I'm seeing is that um, when we hit all-time highs, we actually were peaking for a wave five, which there's two different things that could be valid here. We could either have a bullish, which would be that this is a blue wave three, or that it's the bearish wave five. So the bearish wave five would be that where I have this red three and there's this red four, that it's actually the blue three, blue four, blue five. So in the bearish sequence, everything that we're currently seeing right now is actually a corrective sequence, and we're not going to go to all-time highs. We're not going to break all-time highs. Ultimately, the bears say we've already peaked here for this, what I'm calling the bearish blue wave five. I put it in purple so you can see it. So they're saying we've already peaked. We're not going to break that, and that we're going to break out of this ascending triangle. So this is an ascending triangle that we're seeing right now. We're going to break out of this to the downside, which you can see last week we actually held that support. We're going to break out of this to the downside, and we'll probably see a three-wave move down. Could be a seven-wave move down. Either way, but what they're saying is, hey, no, we've already topped and we're heading down here. To find the bottom, and the bottom could be somewhere between 180 to 150. Obviously, it's a really big range, just because if this was top here, what that would mean is it's a Roman numeral one of this wave three that we're currently in. On the grand super cycle, we're currently in what I'm calling a parentheses Roman numeral wave three, but this would just be the one of that three, and we'd be coming down for the two of that three. And because we'd be coming down for the two of that three if we topped, that could mean that we'd go to 61.8% retracement if it was a normal wave two correction. If it was deep, it could go worse than that if the market completely crashed. Or if it was shallow, then it could just go to like 180 or something of that range. So that would be if we've already peaked. So the bears are saying, hey, back here we've already peaked. It was a blue three, blue four, blue five, and now we're coming down for wave two right now, somewhere in the 150 range or somewhere like that. So I don't favor the bear count, so I'm going to get rid of this. I'm just going to move this stuff away. Well, not that, but I'll move that stuff away. So we'll just ignore this stuff down here for right now. I'm actually favoring the bull count. Let me kind of go over why I favor that. Okay, so what I'm seeing and what I think is happening is that exactly what I have drawn here is that we actually went up for we had the blue one, blue two, then we had an extended wave one, pulled back for a two, rallied up for a three, pulled back for a four, and that we've just hit this red wave five, which is this blue, what I'm calling the bullish blue wave three. This is the actual count that I favor, and what I think is actually happening is this right here. So we've hit a three. Now we pulled back for a four. This is the start of our ascending triangle. Ascending triangle pretty bullish scenario. Obviously, we're not able to get over the highs. We keep hitting it and bouncing off of that resistance, but the dips are getting bought up. So every time we go down for a low, it's a higher low. So that's a bullish scenario. Every low is a higher low. So what I'm seeing is that we pulled up for our 3, we pulled back for our 4. Now we're in a 5-wave impulse looking for all-time highs. Now I had one guy that put a comment on here say, hey, he doesn't really know how to count sideways. It's not easy to count sideways. Now, before everybody, puts out indictments on me saying that, hey, look at that, his red wave 4 crossed through wave 1 territory. This dude's an idiot. If you actually go research other wave theory enough, in the current market, as long as you're not in a higher degree wave 3, so as long as this blue 5 is what I'm calling it, wasn't a blue 3, as long as it's a 1 or a 5, this is absolutely valid, and you can have wave 4 cross into wave 1 territory. So now that we've covered that, what I'm seeing is we popped up for a 1, we pulled back for a 2, we popped up for a 3, we pulled back for our 4, which, yes, I'm saying it bottomed last week and it was in wave 1 territory. And what I'm seeing is that we're going to see an extended wave 5. This extended wave 5 I see taking us somewhere into the 260 range, before the market completely tops and we pull back. And when we go up for this 5, what I think is going to happen is there's a good chance we're going to go up and hit that top resistance again, pull back. Ultimately, we're going to at some point rally and break above that. We're going to go up for a 3. It could be in the 250 range. Then we'll have a pullback, and then ultimately we're going to rally up for this 260 price target. Now, this could take months to happen. Obviously the way I'm drawing it, it looks like it's going to happen pretty quick. That's just the way I drew it. Another thing that kind of helps when you're looking at these situations to try to figure out like how you'd want to trade it, whether you think it's a bear or a bull signal. Obviously, both of them are kind of valid here because I could bring this 3 here, I could bring this 4 here, and then obviously the bears would be saying, oh, that was the 3 and this is the 4, and we've already peaked and all that. The reason I also don't see that is, so right here, this candlestick on the weekly time frame is called a hammer, right? So if you see it, on an uptrend, it's called, I think it's called shooting star. I'd have to go look it up. But either way, when you see it on an uptrend, a lot of times it means that we're going to dip after that. But when we're seeing it on a downtrend, which obviously we had a bearish candle right here, we dipped down. It's called a hammer. So that's a bullish signal. So to me, I'm saying, hey, look, we came down, we had a higher low. We see this hammer candle on the weekly. Ultimately, what I think is going to happen is this going to break out to the upside. So hopefully that's right. So a couple ways to kind of trade this right now. So if you want to be aggressive, whether you're a bear or bull, you could take your trade right now and say, hey, whether I'm playing options or shorting, if you're playing options, you want to buy yourself some time because nobody really knows when this thing's actually going to break the top or the downside. That would be the aggressive way to take your trade, is just to say, hey, I like the bear bull thesis and I'm going to run it right now. The conservative way to trade something like this where they're both valid is you actually wait for confirmation, meaning you wait for it to break the side that you want it to, right? So like if I'm a bull, which I'm saying I am, the best way for me to trade this would be I want to wait for us to break the ascending triangle to the upside. Obviously, we haven't been able to do so, and that's going all the way back to March. So what if this thing goes on for 3 months? Well, if I buy calls and it's still bouncing in between here for the next 3 months, well, I'm screwed. I'm going to lose all my money. So the best thing I could do if I want to play options on this thing, in my opinion, would be I'd want to wait for confirmation that we broke to the upside, because normally, we might pop a little bit over and then pull back, so maybe we won't get completely rejected at it. You'll go a little bit over, pull back, and then you'd want to buy it at the trend line or right around the trend line. And then if it does get rejected and go back in, then you could sell and get out, or you could roll the dice and see what's going to happen. So either way, I think whether you're bear or bull, I think the best way to trade this right now would be just to wait for confirmation to break to the upside or the downside. And we'll see how this does play out. But ultimately, I do see us rallying up to somewhere in this 260 range. And then that will be our red wave 5, which is the blue wave 5, which ends up being the one of the higher degree wave 3. So hopefully this all makes sense. Obviously, when you start to look at these higher time frames, it can get a little complex and a little confusing. But ultimately, I do like the bull thesis here. I'm going to be watching this, and I'm going to be setting alert, looking for the break of the top of this ascending triangle, which it looks like it's in the mid 230s. So if we can get IWM up to 235 or so, I would then probably be buying a dip on any pullback. So we'll see what happens. Hopefully we can make some money on this. All right, guys, if you like these videos, go ahead and hit like and subscribe.